Well, first there was the stealth stock market rally, right? It hated scorn from the moment those major indices began to rebound in March of 2009. Well, guess what? Now there's a stealth housing rebound. Existing home sales up huge. I'm talking sales and prices, erasing most of the damage from the housing implosion. We got a report today that the annual sales rate for used homes and resold homes, 5.49 million. Record high median prices, $236,000. Now, the news seems to validate the fact that most people now see real estate as the best place to invest, although the fact is they also see cash as an investment. It's not. They hold too much gold, and of course they've missed the bond market rally, so those things don't necessarily bode too well. Joining me now, Bankrate's chief financial analyst, Greg McBride. Hillary Kramer's with us, A&G Capital CIO and president. Dave Nelson joins as well. He's Bell Point Asset Management's chief strategist, and our friend Anthony Scaramucci stays with us as well. Greg, I want to go to you first. This is your poll. Anything in there that stands out as really unusual to you? Because I still find the fact that people aren't more into the stock market after this rally kind of baffling.
Yeah, I mean, you're right, Charles. I mean, first of all, we're not seeing the same kind of bunker mentality that we've seen the past couple of years. Real estate did edge out cash for that top spot this year, but cash had been the lead runner the past couple of years. And this is a poll we conduct regarding specifically how people would invest their money for the long term. We word the question as money you wouldn't need for more than a decade. So we're really gearing this toward long-term investing, and yet at the same time, cash this year is a close second after 2 years running at the front, and the stock market once again a very distant third.
You know what's interesting too, Greg, is that millennials, I mean, I think cash is number one with them. Do they understand if they put $1 under the pillow 20 years from now, it's going to be like a quarter or a nickel? I mean, do they understand that it's not that the tooth fairy it's not going to show up and add a couple of bucks to it?
I'm very concerned about that, Charles, because, you know, we're talking about a generation here that is going to have the biggest retirement savings burden in history. Their lifespans are longer. Their health care costs are going to be higher. They don't have the pensions that previous generations have had, and Social Security is more uncertain for them than for any of their predecessors. And the fact is they're saving money. The problem is they're not investing it appropriately for the long haul. And that really threatens to leave people well short of where they need to be because they're not adopting that appropriately aggressive stance for the long haul.
Right. David Nelson, we've been on the show a lot. We know you're a renter, so you don't believe in this housing thing, although you got to be impressed with the rebound in prices so far.
I was impressed, and I understand that the attraction of real estate. Look what investors have lived through, you know, over the last several generations. Look, a home is something you can touch and feel, and if you're underwater in your house, you're okay. You got a place to live. You know, a stock investment that's underwater, you got a piece of paper, and unless you're getting a dividend, you're dependent on the next guy buying it at a higher price. So I understand the attraction. As far as the millennials go, I totally get why they're in cash. We shouldn't be surprised because look at what they've lived through for the last decade.
Although at their age, they should be taking the most risk, not the least amount of risk.
It's going to take an education process.
On the real estate side, for an individual, how do you look at this?
Well,
what should they be looking at?
Again, I always recommend if you have the money, try to own your own home. I think even though it fluctuates, it's a good thing to have for financial security. But there are mortgage REITs out there, or the mortgage REIT ETF, MORT, gives you an attractive yield. And you can play the advantage of what's going on right now. There's still 13 million homes that are effectively underwater where those homes haven't been able to refinance. Sure. And so those coupons are fairly fat. One thing Skybridge has done is played the interest-only side of that in our own portfolio.
MORT, M-O-R-T. Hillary?
Real estate, by its nature, you're hugely leveraging up, and it's illiquid when you go to sell. You want to be in stocks, especially in this environment, unless you can pay cash for your home that you're going to live in.
You mean you would pay cash? You wouldn't rather put cash to work somewhere else and just have a mortgage at these low historical rates?
Well, the prices, it's that correlation. Interest rates are at a historical low, but look what's happened to real estate. And of course, I'm looking in the New York area. There are other parts of this country where it is an opportunity.
Yeah, well, let's face it, the Wall Street and the Chinese got in when Americans were afraid of owning American real estate, the Chinese bought it all up. All right.